Thank you everyone for joining us. I welcome you to a very bespoke session on innovation and cross-border. I have a very distinguished and diverse set of thought leaders here. So as we all know, and some of the points which have been touched upon in the earlier session, today's ever-evolving tech journey, innovation has no border. And when it comes to the cross-border opportunities, from a simple collaborative research to a partnership, the potential is limitless. We would, of course, touch upon certain sectors which have an edge when it comes to the cross-border opportunities when compared to others. And hence, with that thought, without much ado, I'll commence the session pointing towards Visa with some pointed thoughts on the healthcare sector. Visa, you have seen the Indian healthcare journey for really long, and you have observed it very keenly and closely. In your thought, what do you see? I mean, what are the offshore opportunities for this sector? Is there any challenges which you have faced? Anything, any insight on that point will be really helpful for us.
Thanks, Karthikeya. So for us at Tata Capital Healthcare Fund, we have now been investing for over a decade or so across 2 fund vintages. And we have a specialized healthcare and life sciences private equity fund, largely doing growth capital investments. So this is one sector where we've seen, I think, tremendous inflows in terms of foreign capital. So if you look at the overall sector itself, right, the last 2 years, healthcare and life sciences has attracted nearly $6 billion of private capital investments. And especially last year, more than 80% of that has actually been foreign investors. So clearly we, and this trend is here to stay. We estimate that for the next decade or so, there'll be at least about, another $25–30 billion of healthcare private capital that will hit India. And I won't be surprised if a majority of that comes from foreign investors. For us as healthcare and life sciences private equity, I would say our, impact from an offshore point of view, I would say rests across all the 3 pillars. So, one is in terms of our investor base. Nearly about 45% of our investor base itself are offshore investors. And this could be a mix of global conglomerates, medical conglomerates. It could be, dedicated global healthcare investing houses, or even family offices for that matter, who are very deeply engaged in the sector. So clearly there is, on the investor side, we are also seeing impact-focused healthcare investors. The second, I would say from an investing standpoint, in terms of our current portfolio companies, we have, on a very selective basis, taken the first steps towards offshore investment. 1 out of our 7 investments currently is an overseas, is an offshore company. It's a company in radiology imaging. It's an AI-based radiology imaging, and the name of the company is Deep Tech. So what they do for a living is actually build algorithms and the software platform. They're currently ranked among the top few globally. They scan about 100,000 scans a month or so. And more importantly, they have, as an investor base, before we came in as the largest financial investor, they have investors from Japan, from US, etc. They do work across multiple geographies, although they have a big customer base in India. They also do work in Singapore, in US, Europe, Japan, etc. So that's from an investing standpoint. And finally, maybe let me take an example about some of the exits that we have done from our past fund and vintage. We've had an opportunity to do cross-border exit. We had invested in a chain of dialysis, kidney care clinics, which we exited to one of the large conglomerates in this space. So I would say across the entire life cycle of, say, from an fundraise, investments, exits, we've seen I would say, a splurge of cross-border interactions, not at a very deep level, but obviously this is a starting point. So we're definitely bound to see that. So it's not something that we can stay away with.
Thank you. And if I may do a quick follow-up on that, you are a AIF based in India, and there is a limitation around offshore opportunities for AIFs to capitalize because of the SEBI thresholds they have. How do you perceive that when it comes to exploring offshore opportunities for Indian AIFs? Does it create some sort of a deal roadblock? Does it impact the deal shaping for you? Any thoughts around those will also be helpful.
It's a very relevant point, especially in today's context. I think, one good thing is that since 2022, I think SEBI has relaxed norms for AIFs to invest outside the country. But that was a $1.5 billion quota, right? And that has expired now for more than 6 months. So if we have to do follow-on investments, etc., so that's a little tricky how we go about, etc. So it's really challenging. Really hoping that SEBI can look into this matter and we can see this window opening up and expand and also enhance the limit. So clearly this is this is definitely, I would say, a roadblock which we need to cross.
Thank you. No, very, very well said. I think there's tremendous opportunity at all level of financial sponsor journey, and everybody is exploring this opportunity, and perhaps if the thresholds are higher or we have more headroom, there will be much better play to see it. On this thought, Padmaja, I'll direct the question to you. I mean, in your experience, in your recent interactions, which are the sectors you have seen which are gaining more traction from a cross-border opportunity perspective? Of course, some of the names which comes to our mind is deep tech, space tech, and so. But what's your take has been? And then perhaps a second question I would also like you to touch upon. I'm taking a note from what Visa said. Any regulatory gating items one should keep at? You have seen several of those early stage tech and emerging businesses which have either gone offshore or they have undertaken flip, externalization, and several other restructure. What's your take has been on those?
Thank you. Before I start, I just want to first actually congratulate IVCA, Rajat, and the team. I think the event we are seeing today, every year, it seems to be growing and growing. So while it does reflect how the industry is going, I think it also says that you have had a huge hand in growing the industry. So congratulations for one more successful event. So, and thank you for having me here. I think what I would say is, we are early stage investors. We invest literally from 50 lakhs to 50 crores. Entrepreneurs can raise, so we are coming in very, very early. And purely from that perspective, we are usually continuously investing in best of the next. We keep having to look for emerging sectors every so often. So I think innovation almost is a DNA for us as we invest. And that is where we've also had a lot of success over the last 18 years that we've invested. Now, what we are seeing in the innovation space is a couple of things have changed, but more importantly, there's a lot of deep tech that has started to emerge. And what I mean by deep tech are a couple of things. These are propositions which have a lot of science and technology. They are building IP. And I think there is a huge focus now that entrepreneurs are focusing more on the product side. That piece is good, and I think Rajan mentioned it in his session that he's starting to see a lot of PhDs start to build businesses, which just tells you that the science and tech part is deepening in the country. While that is good, I think one of the issues that we are seeing in the deep tech, and if you look at these companies, there are about 4,000 or 5,000 companies now, somewhere there that we are seeing. They've raised about $500 million domestic money, another 30–40% FDI that's come in. So this space is growing, even if you look at just last year's numbers. There are a couple of things that are very interesting that's happening. These founders, you didn't see earlier the science and tech guys, PhD guys, actually starting up in the very first place. That started to happen. But the next piece which is missing currently is that the business side, the commercialization side is very weak. And a lot of the early stage investors like us have to do a lot of heavy lifting on that side. So if you want to take innovation cross-border, just a tech product or just a formula or a molecule is not going to go cross-border, right? So I think that's the big piece, that if we are investing in these companies, one has to be prepared to actually help the companies almost on a weekly basis, right? You're always on the phone, they're always asking for advice, they're always asking for connects for talent. They don't even sometimes understand the fundamentals of running a company, right? P&L. They sort of confuse between CapEx and OpEx. It's as fundamental as that. So that, I think, is a huge thing. The second piece, which we've been sort of discussing with BIRAC, where a lot of the biotech companies are emerging, that here, this early stage money has started to open up, right? Investors like us, family offices, angels, they've started to open up. But these companies will die if the next round funding doesn't happen. So a lot of the deep tech companies, there's no next round funding in the country. So it is almost mandatory that they start preparing for the global market, be it the US, be it Europe. So the foundations of these companies have to be global from day one. The way their outlook, the way they set up their processes, their understanding of GAAP of the US, understanding Indian accounting, how they interact with talent, all of that sort of needs to get nurtured almost immediately, because the markets don't exist here, the customers don't exist here, very few do, I would say. And funding surely later rounds is very difficult. So I think that is the second big challenge to go cross-border, but it's mandatory to do that in some ways. The third piece that we are seeing is India's regulatory approval process. If you look at biotech, if you look at health tech, that is very, very, very nascent, right? There is nothing here. There's no equivalent of FDA here. So that is another challenge where companies are almost forced to go global. And that cross-border becomes, therefore, another piece that is very critical. Now, the interesting piece that I find which is happening is earlier, about 4 or 5 years ago, we, for instance, had a company which was based in India, which was being built for the US market, right? And per force, that company had to flip to the US, okay, to attract funding from there. So once they flipped, they got American money, they got European money, they've started building that market. I think today, when I look at some of our deep tech companies, they are still based in India and they are being able to access American markets, the US market, especially space tech, for example. And they are being also able to attract FDI. It did take a lot of heavy lifting. We had to work with Department of Space, we had to work with RBI, we had to work with whoever. But the good part is that after all those months of working, there was success at the end of the tunnel. So I think that's the big change that we are seeing, that how is it now compared to 4 or 5 years ago. And finally, I think the biggest challenge when you're investing is how are you going to exit? How's the liquidity going to come? And that piece is very, very tenuous right now, because you're getting global money or companies are going global. How do Indian investors exit? There are all these issues of restructuring. I think some of the things we've been talking about is, can Indian exchanges allow listing of IP-based companies, for example? Because if you start having liquidity options, then I think Indian money, domestic money will start increasing in these sectors. But, one may think it's all negative. No, I think I'm very positive. This will keep increasing. I think Indian talent will go deeper on the science and tech side. We'll see much more, how should I say, innovative companies, deeper talent. And the good thing is our LPs, our investors are very gung-ho. So, in our I was just thinking, just sort of recapping, and about 70% of our companies do have family money, family office money, or HNI money, who have sort of co-invested. So I think that wallet is opening up, but it's the later rounds that I think needs to be sort of encouraged.
Well, thank you, Padmaja. In fact, I want to hold your thought on that one. I just want to pick Luzia. You have seen, so the same narrative what Padmaja just explained, from an offshore perspective, from an international perspective. How do you see that in the context of Indian Inc.?
Yes, first of all, thank you very much to EVCA for organizing this session and having me as speaker and sharing the insights with the panelists. Yeah, deep tech, as explained, has the same issue everywhere. It's not just a problem here, it's an issue in different countries. So how to support scale? These businesses start from a technical aspect, a scientific aspect. It is important to find a scalability. Now, one of the answers that has been found is corporate funds or corporate venture funds that have a very strong scientific background, and so they can help scalability. Yeah, it's a cross-border business since the beginning, but I think that for what is the experience, I was investor in deep tech space long time ago. What make it successful is really to have a corporate since day one. A corporate fund, which in combination with the fund is really able to support the technical standard and also to help the scalability. This is one aspect. Back to the cross-border aspect, I think that in deep tech there are sectors and verticals which are more scalable internationally than others. There are some segments which are specific to the countries of origin, and there are others like space tech, edu tech, health tech, which can be transversal. I make you an example that we have in Europe, that you have here in India. We have an health tech in Europe named Doctolib, which is quite known. It started as a deep tech and is a platform dedicated to appointments and to teleconsulting. In India, there is another company named Nirok Street, which is doing the same thing in Ayurveda. So it's the same technology, but in a different market. So these spaces of this deep tech are internationally scalable, while there are others in which they are too specific to the reality. So this is one aspect of cross-border. Then there is another aspect of cross-border, which is concern more the investors, the LP, the GPs, which is another chapter.
And Luzia, if I need to just conclude the thought on that point, if one is looking to scale up offshore, build a brand, expand the way Padmaja mentioned, perhaps your customer base is there, perhaps your deep tech is more suited to the ancillary tech which is available in that jurisdiction, how to go about it strategically?
So you mean how a deep tech can go out of its market and scale? As you know, the point is to find the right corporate, or sometimes what works and what worked in the past as to have a fund which is backing this deep tech, but this deep tech is making acquisitions in other markets. So they create a sort of build-up in the same technology, and so in that case you became local in day one. So it's not just an internal development, it's really a buy and build.
Okay, understood. Padmaja, I'll just conclude the thought on the regulatory piece. The way Visa indicated that for an Indian AIF, there are of course challenges when it comes to offshore investment under the SEBI regime. Similarly, for the early stage companies which are either earlier compelled to flip offshore, or even when they are sourcing FDI directly into India, that's the trend which you have noticed now. Any other thought from a FDI or a overseas direct investment perspective which becomes ever talked item in your portfolios or your founders when you are interacting? Anything where perhaps from the ease of governance perspective, the the government and the regulators can help and do something which can ease up situations?
So I think if I approach it slightly differently, if I may, is to say that when you're investing overseas, it's very clear from the SEBI regulations. And when you're investing in India, of course, it's also very clear. I think the challenge happens that you've invested in an Indian jurisdiction company, and if the company is raising next round or for some other reasons it moves overseas, how do Indian AIF investors, and I would actually expand it, it's not only Indian AIF investors, but also individuals or corporates investing from here, they have a challenge. Now, that's the piece which is a really, which is flipping in some ways, right? And flipping, I think we all know, especially people in this room, what are the challenges. So what we've tried to do in some cases is actually restructure, right? And we are now talking to companies when we invest to say that, you will need to be open about restructuring. So especially if we're investing, let's say in a biotech, or we are investing in a multi-product company, we are saying we'll restructure to create a subsidiary, and the subsidiary can then be bought out by overseas investors. So we've had to be innovative as well to go cross-border in some ways. But I think there is a need, and I haven't really thought it through to be very honest, but there is really a need if we want to breed deep tech companies, we want to create, we want to have companies built in India for the globe, we will need to have a structure, right, which will enable this FDI coming in or markets being accessed overseas. Because earlier it was a little easier in some ways. When we had angels just investing, it was much easier, but now even the angels are coming through a SEBI regulated fund. VC, of course, is coming. So I think, and then there is the added piece on RBI, etc. So I think there is clearly a need for a discussion if we want to take deep tech and build it out in this country. How are we going to do next rounds and exits? Because if that avenue is not open, there's going to be restricted investment. So FDI is one, but if there's a word called FDO, then there's...
If I can add one point on this, when you promote a deep tech, you support a deep tech, the name and the brand of the fund, of the promoter makes a difference as well. So, why a lot of brands and the PE are so successful is also because their own brand is known outside their own geography. So what I'm very often discuss with offshore funds is that the success of your portfolio is also based outside your geography, is based on the reputation and image that you built outside your geography. So this is require energy, time, and resources to build a brand. A brand is always a brand, could be financial, luxury, but the logic is the same. So brand building for sponsor, for PE, for VC is becoming key, so invest in that sense. This is why we see all these international brands that are successful everywhere.
Understood.
Good point.
Thank you. Thank you for concluding on the regulatory piece. That's a burning talk of the point for every startup, every tech company which is ever thinking of going out and exploring an investment there. Dr. Tandon, thank you. I have a question for you. How do you see the journey of the medtech and the sentiment in the Silicon Valley vis-a-vis India think? I mean, considering your extensive experience on the medtech, I would like to hear how do you perceive that? What's the sentiment? How the trends have shifted towards India and its favor? If you can throw some light on that. Thank you.
Thank you, Karthik. I too, like Padmja, would like to start off by thanking Rajat and Akriti and the rest of the IVCA team for inviting me and including me, and also my dear friend Visa for connecting me with the folks that I already know. So it's a pleasure being here. So in the context of cross-border, Karthik, and also in the context of deep tech, with medtech and biotech also being included. As you know, that the critical and emerging technologies was initially launched with a deeper focus on it between US and India in 2020. And at that time, the focus was more in space, cybersecurity, semiconductor, AI, so on and so forth. And the more recent development is that we also have biotechnology and the general area. So the deep tech is expanding, and the medtech, specifically the way we are looking at it, is going to benefit a lot from multiple forces that are at play. So first of all, in medtech, as you know, early intervention plays a very critical role in ensuring that we save lives of the patients, and we also save the whole economic issue. Oftentimes, when you don't have early detection, then you have the lack of the economic equity becomes even more dire. So medtech is going to play a very important role, and the imaging aspect, with the help of AI, will play a pivotal role in making exponential leap out here. And the cross-border element is going to be important because India, of course, has a scale of 1.4 billion. And as we all know, that medtech is getting to be more and more engineering coming into medtech. And maybe 10 years ago, we would not have looked at India the way we look at India today. But after the Chandrayaan and after the COVID and the success that India has had during the whole COVID debacle that we had worldwide and India's pivotal role, India is no more seen as a recipient, but is seen, and also not just as the ones who are filling the bottles and selling it out, right? It is now seen as a co-creator in complex areas of science. And India also lends itself very powerfully to strong critical mass of engineers. And whether it is cybersecurity, which also enters the realm of medtech and biotech because we have health cybersecurity. And we know that many times that has come into play, that whole issue, and it's going to become even more important going forward. So that is going to be an important piece. And from the perspective of Silicon Valley looking at India, many of the Western medtech companies do not have a business model that allows them to enter tier 2, 3, 4 cities in India. That business model is not sustainable there. And if we have Indian entrepreneurs working in those areas, and given the price point that they work with, which made Chandrayaan or a Mars visit possible for India the way they did it, then what they will do is they will create an ecosystem which is going to mature, and then the Western companies, American Medtronics and the others being some of them, can then acquire those Indian entrepreneurial ventures. And so it's going to be a win-win from both sides, and it's going to be a very powerful ecosystem that's going to emerge. So we are very excited. And then there's yet another force which is at play in this, and that is the whole force of Quad. The US, India, Australia, Japan, and all these 4 countries are very powerful from a tech perspective, and they're looking to partner together, not only in just in the areas of geopolitical strategy, but part of that geopolitical strategy is going to be deep tech. And so from all of those perspectives, I think this is an exceptionally powerful time for the cross-border. And I compliment Rajat and his team for making this gathering even more global than it was in the last years.
Thank you. No, this is very encouraging, and my takeaway is simple, that Silicon Valley is bullish on India's story. Just one, perhaps a cautionary statement to our mind or a founder's mind. is there any other jurisdiction globally which you perceive is as compelling and competing with India when it comes to the investment opportunities or expansion opportunities? So in other words, if a Silicon Valley investor is exploring opportunities in India, I mean, whether there is a competing jurisdiction which is also at the same time propelling their growth story, and India Inc. has to think about it.
No, I think that's a very good question. And I think more and more we are seeing worldwide that countries are trying to become more savvy in ensuring that they have an ecosystem that is being developed that allows investments to come in and their backyards to be utilized better because of the shifting supply chain. So I think we all know the Vietnam story. And there are several other countries like that that are taking advantage of it. But not to deflect the answer from your question, I was in vibrant Gujarat, and I was giving a talk in deep tech, and I was on a panel, and we were talking about semiconductor, and the big announcement was made that Gujarat is going to be the very powerful center for semiconductors in India. Now that would be a difficult story for other countries to compete with. I mean, the Vietnams of the world can compete with the fact that they can take advantage of the changing supply chain. But if India becomes very, invests a lot of time and money on semiconductor, which is such a critical aspect of where the world is going today, every automobile industry knows that the semiconductor chips are critical to them. The medical devices, every device has semiconductor chips. So the convergence of all of these forces allows India to be, in some ways, to shine in this story, and also it does help that they have 1.4 billion, a huge internal market. But yes, many countries will compete and will make India be more aware that they cannot sleep at the wheel if they want to take this opportunity, run with it. But from what seems to be happening is that India is looking to make the best of it. But to your point, there will be other players.
Thank you very much. This is very promising.